Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the Dollar Yen, as well as the Australian dollar versus the yen. I'm also going to share the Australian dollar versus the Canadian dollar, and we're going to take a look at both a bullish and bearish scenario that could play out. So let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we begin, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. So first up, we have the Euro USD. So we've been looking at this ascending channel for the last few weeks, and we've also been talking about this 110.70 resistance area. So notice how we have these lows back here, we then have these highs, this low, and this recent swing high. We also, this ascending channel is well defined on the top based on all of these wicks. However, we have yet to see a retest of that channel bottom, but based on Friday's price action, it does look like we could get that retest this week. Now, I did mention this bullish engulfing candle recently. So if you notice, when the pair came down into this 109.90 to 110.20 support area, we were watching for a reaction in this region, and notice this bullish engulfing candle that formed. Now, I pointed out in the members area that I got long around 110, so right around this area here. And the only thing I did here last week was get out of that long position on Thursday. So when I saw the pair come up intraday, come up here to this high, and then start to immediately sell off and drop back below this 110.70 area, all right, I got out somewhere right around here. So that's the only thing I did last week, and it turned out to be a great decision because Friday moved all the way back down here to 110.20. So although we could see a bounce from 110.20 this week, based on Friday's movement, it does seem like we're going to get a retest of that confluence of support right around 109.90. So remember that 109.90 was the level where the Euro USD broke out from in October. So we had this descending channel, and notice that the pair broke out on this candle right here. So this close broke out. We then got the retest of 109.90 and the subsequent 200 pip rally. Now 109.90 is also this ascending channel that I just talked about. So this area right here is going to be key for buyers to hold. If we see a daily close below this area, I will look for a short for a move down here into the year-to-date lows just below 109. However, if we do see some type of bullish price action, such as a pin bar form from this area in the coming week, that could trigger a move back up into 110.70 with a break there taking on that 111.70/80 area. But for now, I do favor staying patient on the Euro USD because I don't want to buy this based on Friday's sell-off. There is no buying opportunity here right now, in my opinion, and we also don't have a selling opportunity as long as the pair is above that 109.90 area. Next up, we have the British pound versus the US dollar, or GBPUSD, and we saw this one come off of resistance as well, just like the euro did. So we've been looking at this range between 127.70 and this area just below 130. So the idea was that the British pound needed to close the day above this area in order to expose 131.70. Notice though how it never closed above that area, and Friday's price action, Thursday and Friday in fact, sold off quite heavily from that area. So for the week ahead, I do think we'll see another retest of 127.70, and that's going to be a key area for buyers if they intend to push this pair higher. Because if we see it close below this area, it would re-expose 125.70 based on some of these lows back through here and these highs, this high, as well as this bounce right here. So for now, the GBPUSD is going to come down to what happens in this range. So like I mentioned a couple weeks ago, I'm not interested in trading this pair right now while this sideways movement is intact, because right now we don't know whether we're going to get another retest of this area or we're going to see a move higher this week and a retest of resistance. I would prefer to trade a break from this range so that we can see the pair gain some momentum once again, just like we saw back here and again through here. Now the big question is this relief rally over? Because keep in mind that the British pound versus the USD has been trending lower for quite some time. So although this recent short-term trend is bullish, keep in mind that overall, in the longer term, the GBPUSD is still in a downtrend. So just to summarize, a daily close below 127.70 would take on that 125.70 support area, whereas a daily close above this area around 129.80 would expose 131.70. Next, we have the US dollar versus the yen, or USDJPY, and this pair has been incredibly indecisive recently. So we had been talking about this rising wedge based on this high right here and this support area. So notice how on this candle, the pair did confirm this rising wedge with a close below support. We then saw a retest of that level on this candle and an intraday spike above it right here. However, the pair never did close back above that area. So as such, my bias has remained somewhat bearish, although I can't get fully bearish on this pair right now simply because we haven't seen follow through. So since this breakdown, the dollar yen has just moved sideways, which has made it incredibly tough to trade. So I do still have a short on right through this area. However, I've yet to add to that short position simply because, as I just mentioned, the pair has yet to break down. So until we start to see sellers follow through with a move lower, I'm not going to add to this position, and I'm going to keep it incredibly small right now just because we still have this indecision. Now, if we do see the pair follow through this week or next, that would possibly re-expose that 106.80 level. Note too that we still have this level, which previously still appeared as the neckline of an inverse head and shoulders. And this pattern could still play out, just as a full disclaimer. So this was the inverse head and shoulders that we were looking at. The pair broke out here, retested the level, retested it again here. So there's multiple things happening right now with the dollar yen. However, in order for me to scale into a short, I need to see follow through from sellers. And furthermore, if we start to see the pair come up here and start to pressure these resistance areas, that could be a sign that the dollar yen wants to move higher once again. Next up is the Australian dollar versus the Japanese yen, or AUDJPY. This is one that I haven't talked about in quite some time, but we do have a pattern that could trigger another move lower. So notice how ever since this year-to-date low, we have what could be rising wedge support, which came into play last week. We also have this top right through here. Now, keep in mind that the Australian dollar against the yen has been trending lower for quite some time. So this latest pattern could be nothing more than consolidation before that next leg lower. So we saw something similar back here when the pair started to trend higher and ended up breaking below this consolidation and moved aggressively lower. So this could be the same type of situation where we see a daily close below this support, which then triggers a move down here into these lows, or again, that year-to-date low. But the Aussie JPY, just like a lot of other currency pairs, has been indecisive recently. So until we get some type of momentum that could come from a close below this support level, until we get some sort of momentum here, this type of indecision is what I want to avoid. So I'm looking for a close below this area, and I then want to see this area right here attract sellers once we get the close below it. If we do see that happen, we could see a move down here into the swing low around 71.80. And of course, the year to date low is somewhere around the 70 handle. But don't rule out the possibility of another push higher as long as this support level holds on a daily closing basis. So there is a chance we could see the pair rotate higher once again, either come up and retest this high or this wedge top. So that's always a possibility as long as this level is intact as support. I wrote about the Australian dollar versus the Canadian dollar, or AUDCAD, last week, and I pointed out how the pair may have bottomed following this short-term downtrend. So notice how we have lower highs and lower lows throughout this time. However, since the pair reached this area right here, it has started to move sideways. Furthermore, we have what could be a left shoulder back here, a head, and a potential right shoulder. Now, what we don't know is that if this is the right shoulder, or if we're going to see a move lower, perhaps down here into some of these left shoulder lows before we get a rotation higher. So that's what we don't know right now, is whether or not this could be the right shoulder low, or we're going to get a move lower down here into the support area. We also don't know yet if this is in fact an inverse head and shoulders. Remember that the pair would need to close above the neckline in order to confirm this reversal pattern. So until that happens, the Australian dollar versus the Canadian dollar will likely remain under pressure. Furthermore, keep in mind that this, just like any market, could move either way. So this is not a guarantee that the pair is going to move higher. In fact, this downtrend is technically still intact because although we've started to see some higher lows through this area, we don't have yet a higher high. So notice again, back here, these were lower highs. This was a lower high, and this was technically still a lower high. So until we see that move up, break of the neckline, a higher high, we don't yet have a confirmed reversal from the Australian dollar versus the Canadian dollar. And we also have what could be a wedge pattern forming. So this is how I would identify a potential break lower instead of higher. If we see the pair close the day below this support level in the coming weeks, that could trigger a move lower into some of these lows down here and perhaps the year-to-date low. So that's how I would identify weakness and signal that this may not be an inverse head and shoulders pattern, but instead a wedge pattern that could act as a continuation for this recent downtrend. So the key here is going to be to see which way this pair breaks. Remember that a close above this trend line or neckline could expose higher levels, including 92.30, whereas a close below this support would signal weakness and could expose some of these lows down here or even the year-to-date low. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.